Forget everything you know about buying land. The old rules no longer apply because we're stepping into a whole new world of deal making. This era belongs to those daring enough to rewrite the rules, seize new opportunities, and transform their futures. The old ways of who you know are now distorted. This area is about how bold you're willing to be in creating the new era. Welcome to the era of Terra Prime Arbitrage. All this and more coming right now. Let's get into it. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Mark Podolsky. Mark is known as the Land Geek and is widely considered to be the country's most trusted authority on buying and selling raw, undeveloped land. He's actively invested in real estate and raw land for almost 20 years, and he's completed over 6,000 unique transactions in that time. So what does this mean? Well, it means that Mark understands how to buy and sell raw land, but in a way that sidesteps competitors for eye-popping returns. So Mark, welcome to the show, man.
Ryan Miller, thank you so much for having me. I am such a huge fan of you, your community, your podcast. My only nitpick is that I wish you were more ambitious, as we were talking about earlier. Why not making trillions?
I know, making billions, making trillions. Well, maybe that'll be the next evolution, or someone will come out with that show. And you bring up a good point. The sky's the limit, man. In this industry, you can take it as far as you want. It's yours to lose. And by yours, I mean anyone who's listening. You can make it, you can break it, but it's all up to you. So if you want to make trillions, hey, people are doing it, so why not you? So, buying land is such a cool industry, thanks to you, as I'm coming up to speed on that. And I cannot wait to get into all of it. So thank you for being on the show. Let's jump right into it. So for a lot of listeners around the world, we maybe they're looking at land, they don't know anything about it, or real estate or whatever, and you're constantly banging on the drum, letting people know how impressive that this asset class is. So for those that are just starting out, how do they get early points on the board? What would you say?
So early points on the board is going to be basically finding your market, right? I mean, Ryan, let's face it. Nobody wakes up and thinks to themselves, boy, I'd like some raw land in Iowa today or Minnesota today, unless you live in Iowa or Minnesota. So we want to focus on those sunshine states, those fast growing states. So I'm looking at places like California, Florida, Arizona, Nevada, Texas, New Mexico, Colorado, maybe a little bit in the Northwest, Oregon, Washington, pockets in the Midwest, Arkansas, Tennessee, Oklahoma, treat areas, Missouri. And these are going to be your biggest buyer pool. And that's really what we want to focus on. Number one, and that's where we're going to get our big win, is where can I buy this asset and where can I make money on my buy? And where's the best market to go to with my biggest buyer pool?
Brilliant. So the first thing you do to get some early points on the board is make sure that you zero in on the best possible market you can find. And you've outlined your opinions on some of those things. So great. We have the market. What's the next step? Let's go a little bit deeper then. How do you start turning this into an acquisition of raw land that turns into hopefully some profit? What do you do next?
Right. So let's use you as a case study.
Sure.
Okay. So Ryan, where do you live?
Canada.
In Canada. Okay. Mm-hmm. So let's assume that you own 5 acres of raw land where I live in Arizona, mm-hmm. and you owe, let's say, $200 in back taxes. So you're advertising 2 important things to me. Number one, you have no emotional attachment to the raw land. You're in Canada, the property's in Arizona. And number two, you're just stressed financially in some weird way because we don't pay for things like our property taxes. We don't value them in the same way. As a result, the county treasurer keeps sending you notices saying, Ryan, if you don't pay your property taxes, you're going to lose that property to a tax lien or tax deed investor. So all I'm going to do is look at the comparable sales on your 5-acre parcel for the last 12 to 18 months. Now, remember, we're in this very inefficient market. So the comparable sales are all over the place. So I'm going to take the lowest comparable sale, and let's just use easy math. Let's say it's $10,000. And then I'm going to divide by 4. And that's going to get me what Warren Buffett would call a 300% margin of safety. So I'm going to send you an actual offer of $2,500 for that 5-acre parcel that you own. Now you accept it. Why? Because for you, $2,500 is better than nothing. In reality, 3 to 5% of people are going to accept my quote unquote top dollar offer. But now that you've accepted it, I have to go through due diligence or in-depth research. I have to confirm you still own the property. I have to make sure the back taxes are only $200. I have to make sure there's been no breaks in the chain of title, no liens or encumbrances. So I have this property checklist. I outsource it to my team in Jamaica. They're connected to an American title company, and they're going to prepare all that due diligence paperwork for me. But while they're doing it, they're preparing my marketing package because I'm getting the plat maps, the aerial maps, the GIS maps. I'm finding out what's going on in the area. And so I'm creating my marketing package. So let's assume that everything checks out. And I send you a check for $2,300. I send the treasurer a check for $200. I own it free and clear. Now, Ryan, I'm going to sell this in 30 days or less, and I'm going to make it cash flow like a rental home. So I have a built-in best buyer. Do you know who it is?
Who?
The neighbors. The neighbors.
Yeah.
So I'm going to send out those neighbor letters saying, hey, here's your opportunity. Protect your privacy. Protect your views. Know your neighbor. So oftentimes, the neighbors will buy. Now, if they pass, I'll go to my buyers list. If the buyers list passes, I'll go to a little website you may have heard of called Meta or Facebook, buy-sell groups in the marketplace. And then I'll go to the lands, land.com, landmodo.com, landandfarm.com, landcentury.com, landsamerica.com, landslip.com. These are platforms for people buy and sell raw land. But the secret is in the pricing. So all I'm going to ask for is a $2,500 down payment. And then I'll just make it a car payment. Let's say $329 a month and 9% interest for the next 60 months. So I've got this one-time sale. I get my capital out on the down. I could go 6 to 10 months out. And now I'm getting $329 a month and 9% interest for the next 60 months. But Ryan, no renters, no rehabs, no renovations, no rodents. And then it's a simple game. Can I create enough land notes where my passive income exceeds my fixed expenses? And then I'm working because I want to, not because I have to. And just as a side note, because we're not dealing with a tenant, we're exempt from Dodd-Frank, RESPA, and the SAFE Act, all this owner's real estate legislation as well.
Got it. And so when you're looking for these different properties, I know you mentioned there's some issues and there's some reasons why those can be for sale. Where do you find these properties? Where's a good source are there aggregators out there where you can just find a whole bunch of these pieces of parcels of land available? Where do you go to find it?
Yes, such a good question. So you can go to the county assessor and ask them for the list of real property owners in that county. But sometimes you're talking about a county that may not be up to date with the times. And they're like, oh yeah, for $500, I'll send you a CD-ROM. You're like, that's not great. So there's companies like datatree.com, Zamplo.com that are data aggregators. And then you can get a list of those real property owners from the county. And then once you get that list, you'll do what I call an initial scrub of that list. So just to make things simple, we could scrub that list by use code, let's say VL for vacant land. And that way we're getting rid of the commercial property, industrial property, the residential property, the homes. And we're just left now with rural vacant land in that county so that we can start making our offers and doing our research into the pricing of those offers.
So that's how you start to, we would call it a short list. You can kind of get some of the properties that you think is good. Can you search by budget at all, or?
You absolutely can search by budget in the sense that, let's say I'm looking at a neighborhood, right? The assessor's parcel number. So that'd be my next scrub essentially is I want to make sure that if I'm buying, let's say a 1 acre parcel, I'm pricing that differently than a 40 acre parcel because that 40 acre parcel person is going to send me that glitter in the mail. So as far as my own personal budget, I'll be looking at counties where initially when I'm starting out, I can buy 5 to 7 properties. And so if I've got a lot of capital, I can go to areas, say Florida or California, and look at more expensive properties. But if I have a limited budget, I might start in a place like New Mexico, where I could buy inexpensive property starting at like $500.
That makes it so much easier to understand. Probably going to go buy some land after this. We'll see how we call it you soon. But in all seriousness, so when you're doing your first deal, often, and rightly so, you want to look at the upside. And we've covered a few things to say, how do you start bringing some of the upside that land offers into your world? But that's only half the story, isn't it? There's also downside risk that we do need to consider. So from all your experience, man, you've been doing this a long time. What are some downside cautionary things that people really should start looking at when they enter into this field? What would you say?
Yeah, I mean, I think really when you first start, number one, you want to make sure you are really educated on the due diligence piece. So you're not overpaying for the property because you didn't realize about the back taxes, or you didn't realize there was a break in the chain of title. Now, if you're doing a much more expensive property, yeah, you'll close traditionally through a title company. And again, these aren't really big sort of gotchas in this niche of doing the due diligence. But I would say that when you first start out, to sleep well at night, you want to be able to do your due diligence well. But I would say the more common mistake that I see newbies making are fear-based, where they start making offers. And remember, it's going to be about 6 to 8 weeks before you get a return from that seller saying, oh yeah, I'm interested in selling my land. So during that time period, what happens is you go through that process we talked about, you buy the land, and then you say, okay, I'm not going to mail anymore. I'm not going to invest in any more deal flow until I sell this piece of land. And so what's happened is you sell the land and now you're a chicken company with no chicken, essentially. And so that fear of stopping deal flow can really hurt you in the beginning. I'd say that's a big gotcha as well. And then the other one is just being a land snob, right? You're not the market. In the same sense, like, Ryan, do you like McDonald's?
Sure.
Okay, well, I don't. I won't eat McDonald's. It's processed food. Not that I'm judging. Maybe a little bit.
A little bit.
But anyways, I would own a McDonald's franchise, right? Even though I don't eat McDonald's. And oftentimes people will look at the land like, oh, this is 2 hours from the nearest city. It's rural. There's nothing out there. Well, there's a pig for every barn. And just because it's not for you doesn't mean there's not someone out there that would love this asset that lasts forever, nothing to maintain, nothing to protect, and they can afford.
Brilliant. I love it, man. So making sure that you get it right, and getting it right, meaning I would say getting the price right. Is that right?
Getting the price right. Absolutely.
There was you remind me, it was an interesting story. So when I was a younger man in my undergrad, I was able to negotiate a lunch with Warren Buffett. And so I flew out, hung out with him, and it was life-changing for a young man who's in finance school. And I remember he echoed your exact point, is he said, you know what, you make money when you buy, not when you sell, right? And it sounds obvious, but then of course you ask him to emphasize that. And as he unpacks it, he says, look, when I buy something, I don't overpay and hands to the heavens praying that the market will be just perfect and I'll make money. He said, I know that the best thing I can do to make money on any deal is to get in at the right price instead of praying to get out at the right price. Because if you get in at the right price, then you're good and you run it. Is that kind of in line with what you were saying?
No, it's 100% in line with what I'm saying. It's so critical to really buy that asset 25, 30 cents on the dollar. So you have that big margin of safety in case there is an issue and something does happen in the market. Well, no one's going to complain of making 100% return on their money or 50% on their money.
Yeah, you got that right. That begs the question. I'd love to maybe just zoom out to the 30,000 foot view. So this is good. This is phenomenal. Just some quick, easy things that you can implement to get some early points on the board. Also to maybe some risks to consider. Some of them is like your McDonald's analogy. Some of them is buying it for the wrong price. I mean, there's a lot of areas that can take a well capitalized and ambitious person and really clip their wings and prevent them from soaring. But there's also the market as well. And I know I say the market. I know there's plenty of markets. But what are you seeing out there as far as land and everything? What are you guys paying attention to?
Yeah, so I always ask the Jeff Bezos question. And if everything's going to change, and everything is going to change, what's not going to change? And what I think is not going to change is people will always want a real asset and they'll always want a good deal. And as long as those two things stay fundamentally true, I think we're in the right niche in that sense.
Okay. So land's not going to change, even though maybe what you build on it might. So paying attention to the Zon, Jeff Bezos himself, really good advice. What else are you seeing out there in the market?
Yeah. So because we're paying cash, we really don't care about interest rates. So interest rates can do whatever they want. We're going to be fine. And let's look at the macroeconomic conditions. If we go into recession, great. The world's on sale. As we come out of recession, we have equilibrium. It's easy to buy. It's easy to sell. And then oftentimes that market will heat up. It's going to be more difficult to buy at a good value, but things are flying off the shelf. And then that market cycle will tend to repeat. And so that's really how we sort of analyze the macroeconomics of our land niche is from a risk reward ratio. We really think we're in the right spot in that sense.
Okay. So hedging against interest rate risk, which is a very immediate, we'll say risk. So what you're saying, and I have a few other friends that are in real estate as well, and they're doing, one very close friend of mine manages, I think about 500 million or so, maybe $1 billion. And he just launched a new fund and it's pure equity, zero leverage in real estate, which sounds bananas, but I think he's seeing what you're seeing is to say, how do we manage interest rate risk? Because there's a lot of uncertainty. Often that shows up in the yield curve, in interest rates. Governments are doing all kinds of things, which tend to be quite a large driver of what's going on with interest rates, especially in geopolitics. And so now they're saying, what if we just take that off the chessboard altogether and we're not worried about this interest rate risk? And now we unlever this asset. And often in finance, we actually have to do that. Those of you out there, you finance quant nerds like me, I see you out there. So unlevered beta. So when we're analyzing a lot of these things, we're trying to understand how will this thing operate without leverage? And then you actually operate it without leverage. And now you're saying, now it's just up to asset performance and no longer cap stack and financial wizardry, which is fine. Nothing wrong with it, nothing illegal with it. But we're just saying, actually, when you make money, when you buy, you get in at a good price, you buy an excellent asset, you're still going to get some yield out of that. Is that kind of what you're looking at right now?
100%. Absolutely. And you said it in a way nerdier way than I absolutely ever could.
The Land Geek and the Finance Geek, man. We're chopping it up.
It's just fantastic. I mean, I think we might as well just start sharing our screen and just show spreadsheets at this point in the podcast.
Yeah. Let's do it. Well, we promised a good show and we're going to deliver it. So, the other thing in the market, now you mentioned a lot of areas earlier, right? Midwest, Sunshine States, there's a lot of stuff. And I mentioned budget, right? So sometimes you get huge capital allocators like my friend and yourself that we talked about. Then you find people that be like, this is fascinating. It's a great diverse move for me. What if that's who these people are? So what are, just from your perspective, what are some areas that are good for someone with a large budget? And then what are some areas that are good for people who may not have a substantial budget, but still want to enter the game? What would you say?
Yeah, I think right now, markets with a large budget, I would go to Florida, Nevada, Colorado. Smaller budgets, I would stick to the Midwest and definitely New Mexico.
Okay, brilliant. So Florida, Nevada, really good. New Mexico is really good. If you're starting out and you just want to dip your toe a little bit, that's certainly a place to go. Now, it's one thing to talk about the market, and it's cool. And you're seeing a lot of cool things. I'm seeing a lot of cool things. But the reason why we pay attention to the market, one of the reasons why, is because we're trying to extrapolate for ourselves and perhaps for investors, if you have them. Where do we predict, based on today's economy, interest rates, buying habits, migration, immigration, where do we see it going? And I'm curious, where do you see the market going in the future based on what you're paying attention to today?
I mean, I think because the market is so big and there's billions of acres of land available, and you couldn't think of a more boring real estate niche. For example, you wouldn't go on HGTV with a DIY network and see flip this land. The before pictures are all land. The after pictures are all land. If you go to a RIA meeting, a real estate investor association meeting, 100 people in the room, 99 of them will be wholesalers, landlords, and flippers. So you and I would be the only land guy, essentially. So I just think the market is going to remain inefficient. And it's sort of this fine wine type of market where the longer you're in it, the better it is. Because what happens is, when we go back to you as your case study, right? We sold that land for $329 a month at 9% interest. Well, we're using a land contract. And so we're not having credit checks. And so what can happen is a person put $2,500 down, they make 12 payments of $329 a month, and something happens. They lose their job or they lose interest in the property. Something weird happens in their life and they go into default. And now we still own the underlying asset. There's no cost of foreclosure. We keep the down payment. We keep their monthly payments. In this scenario, we've already made our money, but now we get to resell it and we get and expanded out our IRR and our ROI on that one asset. And so the longer you have it, plus you've got inflation that's helping you on the backside of that deal as well.
Yeah, that's brilliant. Yeah, I do see inflation, not like hyperinflation, but I call it runaway inflation. I don't know if that's a technical term, but that's what I call it. It's just to say we're burning a little hot. We're coming in a little bit hot. Land, real estate, gold, some crypto. I hear people saying the moral of the story, and I think this is what you're saying, Mark, keep me honest, is you're saying if inflation is going to be a persistent problem, right? Like we like some inflation, but this one, we're burning hot. Then you can get on the right side of that transaction. And I think I'm just going to take my shot here, but I'm assuming that you believe that land is one of those superior assets in a high inflation environment to really help get you on the right side of that transaction. So not only are you sleeping well, but now you're also eating well as a result of inflation. Is that what we're saying?
Yeah, 100%. You said that really well. I'm a little jealous.
Not to worry, man. We're just chopping it up. When it comes to all of your experience and everything that you've done and people that you've worked with, people that you've helped, your own podcast, by the way, we'll get a shout out for that. But what unfair advantages can you provide for our listeners today with all of your experience? What would you say?
Yeah. So the unfair advantage is going to be understanding that this is a business and to use 3 lever pulleys, right? You've got other people's time, so inexpensive virtual assistants. And so to break that down, where can you use other people's time? Well, there's actually virtual assistant companies already out there that have been trained in this land niche. So one of them is landvaforyou.com. And then the other one is landmasters.us. Landvaforyou.com are Jamaican virtual assistants and landmasters.us are Filipino assistants. So this is very inexpensive, well-trained labor to run your land business because it's a volume business. We're creating a river of nickels, essentially, with these land nodes. So that's going to be your first unfair advantage. The second unfair advantage is going to be software and automation. And there's software programs like lgpass.com, which will manage your mailings. They'll manage every part of that process all the way to contracts, the promissory note, the land sale contract, the purchase sale agreement. What used to take me 20 minutes in paperwork is now a press of a button. And so again, we can always make more money. We can't get more time. And so the software automation is going to be another unfair advantage. And then the third unfair advantage is going to be being in the Ryan Miller orbit of understanding how to find other people's money and raise money. And if you can be a master of that, you literally win in this game. You just win because you become now a black hole of deal flow because other people can't close that deal as fast as you. And once they know you have that capital, deal flow just continues to go towards you.
Awesome. As we wrap things up, any final remarks, anything, any ways to reach out to you, anything that people can do to connect if they want to learn more, maybe shout out your podcast, because I know that's actually super well ranked in the podosphere. I know that's not a word, I just made that up. But as we wrap things up, any final remarks at all?
Yeah, I mean, I would say if you really want to go down this passive income rabbit hole, and I'm assuming, Ryan, that everyone who's listening to this has already solved their money problems, but maybe they haven't solved their time problems. And so I would say that if this model does resonate with you or you want to learn more, you can go to the landgeek.com. I have a link that I'd love to offer your listeners where they can get the book Dirt Rich for free, just pay shipping. And then certainly if they're not sick of my voice, they can check out the Art of Passive Income podcast as well.
Awesome. Just to summarize everything that we have, get a trained VA, leverage other people's time, get those people. Mark actually explained a few areas that we can go to get some of these people, but really leverage other people's time. The game of this industry, if you want outsized returns, it's usually a game of leverage, but that's not always financial leverage. That could be time leverage. There's many other sources of that. The other one he mentioned was learn to raise capital. That's something that I do. We have a community at fundraisecapital.co. You can go there and learn how to raise capital. Last year, they reported of raising over $1 billion as a group. And so this is truly life-changing. And then finally, get your tech stack right. Learn some of those tech stack advantages, and you too will be well on your way in your pursuit of making billions.